So here we are, we're the fourth quarter of this year. Tell us, how do you think progress is going thus far?
Good morning, everyone, and thank you for this invitation to IIF. Once again, it's always a pleasure to be here. So, on the competitiveness agenda of the European Union. Well, indeed, when this European Commission was taking mandate, we set the two overarching policy priorities for these 5 years, which was strengthening our security and defense, I think obviously in a current geopolitical context, and strengthening the competitiveness of European economy. So that's the agenda we are implementing. And on this competitiveness, that's why one of the first initiatives of European Commission in this mandate was a competitiveness compass, where we outline various things which we need to work on to improve Europe's competitiveness, because indeed there are a number of issues we have to deal with. For example, if we look at the productivity growth, our productivity growth already for at least 2 decades is slower than that in other large economies like US and China, so there is some catching up to be done. So therefore we set a number of things which we need to do, from closing the innovation gap, where we are just investing less in research and development as other major economies, to addressing our relatively high energy prices, to reducing administrative burden, cutting red tape. And we are now gradually rolling out all of this agenda. So you will see, well, you had already seen many initiatives which European Commission have put forward already during this year. But as they go also through legislative process, one will see, in a sense, more of them materializing, and practical steps being taken to actually improve Europe's competitiveness.
So all right, so there is a critique that, I understood what you just said. There is a critique that your progress is kind of too slow. And so, by the way, I give you guys a lot of credit for creating a compass which you can look at, and basically it judges kind of like where you are on the scale. But even Mario Draghi himself has said, I'm not sure this is really working. So, he said it differently. But so why is it just hard to get that progress, or implementation is hard, or is it just like, hey, it's complicated, we got 27 different countries, a lot of bureaucracy, we got to work our way through? How do you see, where can progress be sped up, I guess?
Indeed. So recently there was, in a sense, 1 year's anniversary from Draghi report, and there is a widely quoted figures that so far only 11% of Draghi report have been implemented. So indeed, there is a need to speed up. But when I was mentioning our competitiveness compass, it actually was drawing heavily on Draghi report and also Letta report, and setting out concrete initiatives how we are implementing this. And when we now put forward a number of initiatives for rolling out all of those different steps, then indeed it takes a bit of a time on legislative process to go through. So to give a concrete example from my area of work, I'm also working on our simplification agenda, or cutting the red tape. So far we have rolled out what we call 6 omnibus proposals for simplification in different areas across the board, on sustainability reporting, sustainability due diligence, but also different areas like from defense to agriculture, small mid-caps, and so on. So only now the first legislative proposals are gradually, so to say, being wrapped up in a legislative process. So in the coming months, you will be seeing many of those things actually becoming the reality, and those also implementation figures will be improving steadily.
All right, so you mentioned legislative process. So this is one of the issues, and we've heard about it a little bit this morning from different groups. There was a very early roundtable this morning on digital assets and stable coins and central bank digital currencies. The ECB seems like I'm overstating it, I'm sure, hell-bent for leather to do a CBDC, and that the process can all be ready and launched by 2029, so I guess it does take some time, but where do you think the Commission is on this, and what do you do next in order to actually make the digital euro come about?
Indeed, if we look at the digital finance, actually the digital euro is one of our priorities, and the European Commission has rolled out a legislative proposal for digital euro already 2 years ago. So also here the legislative process takes time, but we are making progress, and I am confident that in the next couple of months we'll have quite a bit of progress in this digital euro. And all in all, I would expect that European Union and Eurozone will be front runners in this area of central bank digital currencies. Because what we are observing that the central bank money, which is cash, is being less and less used. So the question is, how do you bring central bank money into 21st century? And that's what you can do with central bank digital currency. Well, in case of Eurozone, that's digital euro. And that's exactly what we are advancing right now. Of course, one important element to remember is that digital euro will be there to complement cash, not to replace cash. Yep. So in parallel with our digital euro proposal, we also put forward a legal proposal on legal tender status for cash. So in a sense, we are reinforcing the status of cash, obliging Eurozone countries to ensure sufficient acceptance and availability of cash so that it can fulfill its legal tender function. Clearly having the signals that digital euro is there to complement. And what ECB is saying is that they need, in a sense, clarity on this legislative process. So they need conclusion of the legislative work on our proposal for a digital euro, because that will then set the basis for them to actually prepare the launch of digital euro, and that's indeed, as you noted, also takes a couple of years. But looking at the state of play globally, I still expect the Eurozone being a front runner in this area.
So in preparing for today, I read some of your presentations, or speeches, I guess, on the digital euro, and you're good in that what you do is you're willing to say there's critiques out there, let's talk about those critiques, and there's criticisms. So let me talk about, it's not a criticism, but why pursue a government approach of a digital euro to try to help on payments and so forth, as opposed to maybe more private sector-led approach, which I kind of equating, although I'm probably incorrectly equating, with the stablecoin movement here that's happening in the United States. How do you see that? Because obviously there'd be the argument that if you get the private sector more involved, that could help on your competitiveness, your productivity, the types of things that we were talking about just a few minutes ago.
Probably I'll start with a simpler part of this response. You mentioned stablecoins. Well, I would say stablecoins is more of a US phenomena. Like 99% of the volumes of stablecoin emissions is in US dollar. So it's not much of a Euro or European phenomena. From that point of view, we have less of a discussion on stablecoins and more focus on this central bank digital currency and digital euro. And indeed, when we are now rolling out this proposal, one of the considerations is that we need to seek as much synergies with private sector as possible, because after all, it is going to be kind of banks and other financial intermediaries which are going to provide digital euros to population. So people will not have accounts directly with the central bank. They will still have accounts with their financial services providers. It is going to be open source, so private sector will be able to build on the infrastructure which European Central Bank will be providing. Also, European Central Bank will be providing this infrastructure free of some scheme fees. So that's also, I would say, an interesting opening for a private sector. So we're looking how indeed this can be done in close cooperation with the private sector. But then, as I said, it also remains a question: what is the role of central bank money in the economy? Mm-hmm. And with the role of central bank in the economy shrinking, because the role of cash is shrinking, digital euro is a useful complement for that.
Okay. All right, so I'm going to pivot a bit, and mainly because I'm pivoting on to something that I've been reading your name in the newspapers about a lot lately. So, which is trying to figure out how to come up with a financial package scheme, whatever the right words are, of utilizing these frozen Russian assets. I know you've been helping trying to figure that out and doing the negotiations. I guess first, where are we on that? And then I'll follow up with that probably.
Yeah, indeed. So the question we are focusing right now is how to ensure that financing needs for Ukraine are covered for the next 2 years and beyond. And there, the first signal we are sending from European Union is that we are unwavering in our support for Ukraine. We have been by far the largest supporter of Ukraine. So far we have provided support, EU and member states together somewhere already about 177 billion euros, and we stand ready to provide this further support. So when we are looking at options how to provide the financial support for Ukraine for the coming years. So one question is that the funding needs are very sizable. So what IMF is saying is that the residual funding gap, which needs to be covered by the new financial commitments over the next years, stand around $60 billion. And that's without counting military needs. And military needs are on top of this of similar scale. So we're talking about very substantial amounts of money. And another aspect which we need to keep in mind is that the International Monetary Fund is increasingly concerned about debt sustainability of Ukraine, and rightly so. So we cannot just continue with the approach to provide more loans to Ukraine. So what we are doing here with this reparation loan. With the reparation loan, the idea is that we do have cash balances which have accumulated in European financial institutions due to the reason that those Russian assets are immobilized. We are not confiscating the assets. In a sense, there is no unity in the EU for doing so. But what we are following through is a European Council decision, which has been also a G7 decision, that Russian assets, sovereign assets, should stay immobilized for as long as Russia has not paid reparations. So what we do now, we operationalize this decision. We then take the cash balances accumulated, provide a non-recourse loan to Ukraine, which Ukraine only needs to repay once Russia pays reparations. So it ticks some important boxes in this regard. It ticks a box for debt sustainability because it's not a loan which puts additional burden on Ukraine. They only need to pay once Russia pays reparations. So we don't need to worry about this debt sustainability part. And it falls short of confiscation because not all EU member states agree to confiscation. So. And it can provide very sizable amounts of support. So all in all, we are estimating that we're able to provide up to 140 billion euros of support to Ukraine in this way. Now, of course, we want this money to last longer than 2 years, and we are also engaging intensively with international community on also other donors' contribution to Ukraine financing in the coming years. And from that point of view, it's positive that we were able to agree at G7 level, at finance ministers level on 1st of October, that we would work in a coordinated way to use those cash balances from Russian assets for Ukraine support, because there are also Russian immobilized assets in other G7 jurisdictions, including the United States.
All right, so let me, on Ukraine, let me take a point, actually. So your former colleague, Cecilia Malmström, was just on, and she implied something, I'm not saying you did, I'm saying she did, which was that one of the reasons the EU and the US came to agreement and there was no real retaliation from the EU on the trade front is, in some respects, was to keep the United States in the game on Ukraine, because that's really, really important. Whether that's right or not, is how does the EU look at their trade relationship and their overall relationship with the United States? Are you worried that the agreement that was reached could be undercut? I mean, the United States is putting on sectoral tariffs on a variety of different issues. I don't know whether they're covered by the agreement or not. So how do you see that relationship? It seems a little shaky to me.
It's true that geopolitics and economy is sometimes difficult to disentangle, but at the same time we have lots of common interests as EU and US, both economically, because our trade and investment partnership is largest in the world, so there is a lot of stake economically. Also, our mutual investments are so it's largest, and also geopolitically, it's clear that the world is changing. Authoritarian regimes are trying to assert themselves at the expense also on Western democracies, and they are closely watching what is the response of Western democracies now, specifically to Russia's aggression against Ukraine. So that's also why we need to stay engaged and work together in actually countering this Russia's aggression and reaching just and lasting peace in Ukraine. On trade relationship, yes, we have now this EU-US joint statement, and from EU side we are working to faithfully implement the commitments we took in that joint statement. US is also implementing the agreement on their side. You asked about sectoral tariffs. To give a concrete example, already the sectoral tariffs on the automotive were at 27.5%, but following our agreement, now for the EU cars, the sectoral tariff is 15%, because 15% was, in a sense, agreed tariff. Of course, we also note that, in general, this trade policy uncertainty remains elevated, and we stay engaged with our U.S. Counterparts, because we believe that it's in our mutual interest to have a well-functioning EU-US trade relationship and not to undermine transatlantic value chains, which are deeply integrated.
Okay. All right. Let me finalize with one question about you mentioned it earlier, and that's why I wanted to come back to it, is on simplification issues, particularly in the financial sector. So we at the IIF, working with our firms, put out a report on effective supervision, and there were a lot of different findings in there, but there were concerns about kind of some of the complexity and whether or not some of the supervisors have it's a little bit unchecked. How is the EU looking at this, their simplification agenda, and then when they think about either supervision or regulation from a financial perspective, how do you think about that?
This is certainly also area where we are working on simplification, but also, so to say, simplification, but not deregulation, because we believe that the financial sector supervisory and regulatory framework, which was put forward following global financial and economical crisis was put there for the reason. And all in all, we see that it is serving as well, like in a recent major economical shocks, like economic impact of COVID-19 pandemic, economic impact on Russia's aggression against Ukraine, which was felt much more in Europe.
Yep.
Financial sector, banking sector was part of the solution, not part of the problem. So we want actually to maintain strong and resilient European banking sector, and for this we need obviously the proper regulation and supervision. So that's the starting promise. Then, of course, there are things we can simplify, there are things we can streamline. We also need to watch international level playing field, and we are working on all of this. And you mentioned specifically the way supervisors deal with different issues, and indeed we have engagement also with European supervisory authorities, and all of the European supervisory authorities now are running their own simplification agenda, also the single supervisory mechanism from European Central Bank, and from Commission side we are closely engaged on this. I recently also had a meeting with the chairman of European Banking Authority, Mr. Kampa, to discuss exactly those issues, how we can ensure that in a sense we have our regulations, that there are no additional layers just added through the supervisory practices. It's also an issue and a concern in Europe, and we are working to address it.
Well, if everybody in the audience didn't understand, Commissioner, you really have a huge agenda. Thank you very much for doing this today. I really do appreciate it, and you went through a lot of issues for us, so thanks again.
Thank you. That's a pleasure.